Yeah, I think he said this on a number of occasions in the past, but reiterating it on CNBC yesterday, I thought was very, very helpful for the community because we just crossed the threshold of 20,000 crypto tokens. And so there's one that's clearly a commodity, and there's 20,000 tokens, most of which are securities. And the entire future of Bitcoin is, for better or for worse, it's linked with the crypto industry. So the sooner that rationality or rationale and order comes to the crypto economy and the crypto industry, then the better it's going to be for Bitcoin, and the sooner that Bitcoin will emerge as a mature institutional treasury reserve asset.
We're hearing more about these exchanges that have liquidity issues. What do you say to the investors out there that purchase their Bitcoin and maybe other digital assets on these platforms and maybe held them trying to earn yield? What should they know?
Well, I think Bitcoiners forever have been saying, not your keys, not your coin. And they say, get your Bitcoin off the exchanges. So, I mean, the essential thing that you want to do after you acquire Bitcoin is to store it in a safe place. Now, that safe place isn't always a hardware wallet. It might be an organization like Fidelity that's a custodian that you trust, or some cold storage, or some institutional grade custodian, or a multi-sig arrangement with a company that you vetted, you trust. But leaving Bitcoin on an exchange has always been risky since Mt. Gox. So we all learned that. And I think that borrowing or generating yield from a unregistered or unlicensed bank or an immature bank is a risky thing to do. And so, for example, MicroStrategy, we took a loan from Silvergate, but Silvergate was an FDIC insured bank. And when we did that, the terms of the loan were such that we didn't transfer our Bitcoin to Silvergate Bank. We actually put it in custody, and we maintained custody of it. So we could have borrowed money at 0% interest if we had transferred the Bitcoin to one of these wildcat crypto banks, where they would say they give you a very, very cheap loan at a high loan to value, but the catch is you have to transfer your Bitcoin to them, and then they loan it out to a third party. The challenge with that is that you take the counterparty risk with the bank. If the bank fails, then you lose your Bitcoin. And then you also take the counterparty risk with the counterparties of the bank that you don't know of. And so if they loan it to someone else, to a hedge fund like Three Arrows, and the hedge fund fails, then you also lose your Bitcoin. So you're actually taking two layers of counterparty risk to do business with an immature bank. It always looks good going in. They pay you a higher interest rate, or they give you a cheaper loan. But the counterparty risk, when you calculate it, offsets the benefit. That's why we've never done those things. That's why we never generated yield on Bitcoin. And that's why we didn't choose to take on those kind of loans. So I think this is a painful lesson for the industry, but it's not a surprise. I think for the business to grow up, we need more mature, better capitalized institutions, publicly traded companies, public banks, FDIC insured banks, right, licensed, registered entities. And of course, when you're doing business, what you want to do is always be careful when it looks too good to be true, right? Because when it looks too good to be true, generally it is.
What do you think is Bitcoin's biggest vulnerability right now?
I think that right now, the biggest vulnerability to Bitcoin is the rest of the crypto industry. I think the 20,000 tokens that are unregistered securities. I think the crypto exchanges, the wildcat crypto banks, all the crypto projects, all of the people trading those cryptos, all the crypto hedge funds, and then all of the negative publicity and then the negative financial outcomes that come about from things like Terra, Luna, right? The meltdown of a stable coin that was not stable, that was traded as a commodity, that was really a security, that because they never declared it a security, they never actually made any fair disclosures on it. So you had an under collateralized asset, $50 billion worth of something trading with $1 billion or $2 billion of equity, right? 50x levered without disclosure, with a lot of DeFi exchanges and other crypto exchanges allowing those tokens to trade and marketing them with leverage. And I think that got cross collateralized into Bitcoin. And so the volatility of Bitcoin on the upside and the downside, and then the negative publicity and the fear that a conventional investor, an institutional investor would have to buy Bitcoin is in large part due to the Wild West and the wildcatters and the crypto ecosystem. And the sooner that we clear out that leverage, and the sooner that the world starts to distinguish between crypto tokens that are securities and then Bitcoin, which is a commodity, then the sooner the industry grows up and the asset class grows up.
That's right. Do you have any concerns about solvency with Bitcoin miners? I know that a lot of them have financed their operations through debt. Do you worry that any are over leveraged?
Well, the elegance of the Bitcoin protocol is that Bitcoin mining is an open, permissionless industry that anybody can join. And every 2 weeks, the difficulty of mining increases or decreases based upon the market dynamic. So I think of Bitcoin miners as the line of first defense for Bitcoin. When things go badly, either when poor decisions are made, or when acts of God take place, or acts of government or nation states, the miners suffer so that the Bitcoin holders don't. So do I worry about miners? Sure. If you're a miner in Iran running on free energy, when the government cracks down on the free energy supplement, you'll suffer. If you're a miner in China running on free or cheap electricity, when the government starts to notice that, you'll suffer. So miners will suffer. When electricity costs go up, the miners will suffer. When the Bitcoin price goes up, they'll benefit. Over time, mining is going to get more difficult. It's going to get 18% more difficult every year because of the halvings. Mm-hmm. And it's going to get 50% more difficult every year because, or 75% more, some percent more, because hash rate keeps coming online. And if you're entering the mining business, you're entering into a very, very competitive industry. So that's why I think it's better, if you have money to invest, it's better to invest the money in Bitcoin, not in a Bitcoin mining rig. I think Bitcoin mining is a business and there are counterparty risk. We've seen, for example, if you had mining rigs in Russia, when the Russian sanctions took place, you lost your mining rigs. Okay, so if you're in business, you can have your business interest damaged by war, famine, tariff, tax, competition, entropy, poor execution. And that's why mining Bitcoin is not the same as holding Bitcoin. It's a very competitive, challenging thing. But if miners on the periphery go out of business, if, when half the hash rate got wiped out in China, it didn't damage Bitcoin. It simply shifted the profitability to North America. And if Bitcoin prices get cut in half, and if electricity rates double, it won't wipe out Bitcoin mining. It will simply squeeze out people running mining rigs that are previous to S9. The third generation antiquated mining rigs will find their break-even point reaches 1 or 2 cents, a kilowatt hour. And if they can't buy electricity cheaper than a penny a kilowatt hour, they're not going to be profitable. So they'll shut down their hash rate. But when they shut down the hash rate, the difficulty will adjust down in order to balance the network. And the network is probably 1,000 times higher hash rate than it needs to be secure. So I don't really worry one way or the other about Bitcoin. And as for Bitcoin miners, yeah, if I would worry about every one of them. And the reason I don't run a Bitcoin mining company is because it would take all my time and all my attention, and I would be worrying about all of these things. But you know what? That's why we want Bitcoin mining, because there are 100 pretty large Bitcoin mining companies with CEOs and executive teams. And every one of those teams is worried about Bitcoin in Kazakhstan or in Russia or in China or in Canada or in Africa or in Texas or in California or in New York. They're all worrying, and they're worrying so that we don't have to. And ultimately, it is like the skin in your immune system. It's there to catch the infection and protect you. And if you lost your skin, then you would probably not live very long. But occasionally, you're going to suffer a bit, and that's just part of a healthy ecosystem.
Well, Michael, you always share the message of don't look at Bitcoin with a short time horizon. But for those out there that are really concerned about this price drop, how much lower do you think it's going to go before we hit a bottom? Or do you think we're near a bottom right now?
It's hard to know where Bitcoin's going to go. It's always surprising you one way or the other. So I mean, I don't pick any particular price target on the downside or the upside, because I don't want to disappoint myself or anybody else. I do focus upon the 4-year moving average, and I think the 4-year moving average reflects kind of the basis that most Bitcoin holders have in their Bitcoin. So I tend to think that as it gets close to the 4-year moving average, it gets a pretty strong base of support. But in the near term, given the fact that there's just so much leverage in the rest of the crypto ecosystem, and there are large hedge funds and large traders that have a much shorter term time horizon, they're going to control the price in the near term. I think all you can do is just look out 4 years or longer, and maintain your strategy. And in the difficult times, just avoid getting liquidated, right? Make sure that you're not in a leverage situation where you get forced liquidated during the difficult times. And then in the good times, hodl, because you'll generally, everybody is not very good at predicting the future. And so if you're trying to predict the future, as a mere mortal, the marketplace will probably make a fool of you.
Well, we got a really interesting viewer question submission. Do you think that Bitcoin is America's last chance to remain a global superpower?
I think Bitcoin is the most important technology of the decade, maybe the most important technology of the century. And I think that the key to being a superpower is being a technology leader. The reason that the United States was a superpower in the 20th century was because they mastered oil and steel and air power and atomic power and other forms of technology, radio, electricity. And I think that in the 21st century, if you want to remain a superpower, you have to master digital energy. And I do think right now the United States has a lead in the Bitcoin industry because of so many developments, so many innovations that have taken place here in this country. So I would say it is critical to the prosperity of the country, and it's probably critical to the prosperity of any country in the world as time goes by.
If Bitcoin didn't exist, what would your company's strategy toward handling the economy be right now?
If there were no Bitcoin, I suppose, we would be levered up with a lot more debt. When you don't have Bitcoin and you look at the inflation rate, your conclusion is, I need to be a net debtor. So if you, I guess you could like look at all the other companies in the world that don't have Bitcoin and ask, how do they get by? Like all the Japanese conglomerates, what they do is they take on large sums of debt, and they either go private with huge amounts of debt, like an LBO, or they stay public, but they lever on huge amounts of debt, because that way they're not carrying cash that's losing purchasing power on the balance sheet, and they lever up their equity. So I suppose we would be a very levered LBO type candidate, running with a very thin layer of equity and negative working capital, and hoping, right? It'd be very stressful, because you would be hoping that you never have a bad quarter, because when you're highly levered up, when you're running with $2 billion of debt and no equity, then when you get a bad quarter, you default on your debt, and then you end up with like Toys R Us situation, or all the companies went bankrupt in the past 20 years. They just have a bad year. They can't make their debt payments. The equity holders get wiped out. The creditors take over the company, and then they start to dismember it and chop it into pieces and sell it. So it would be a pretty dark, unpleasant situation if we didn't have Bitcoin.
Well, a lot of people are really worried about Bitcoin right now. A lot of people are actually worried about you and your company. So, final thoughts for those out there that are like, what's happening with MicroStrategy if the price keeps dipping?
Stay humble, stack sats.